What is up, YouTube? This is Tushal here, back with the Everyday Growth Advisors with another video for you guys. I hope you guys are having a great week. I just decided to put this video out really quickly because I had some time and been a little bit crazy. Been running a couple of things, different projects for the Everyday Growth Advisors. If you guys haven't followed me on Instagram, do that. Everyday Growth Advisor. Just want to shout out and thank everybody who's following me on this journey. Appreciate all and each and every one of you for being a part of my channel. I recently hit 500 subscribers, and I'm very thankful for all of you guys growing with me. As we know it, learn, compound, and grow. Let's do it. So today I'm back with another video that is going to be teaching you more about support and resistance. And this is probably one of the most important videos that I'll ever do. So I hope that you enjoy it as much as I've enjoyed making this one. So with just gonna get right into it. Support and resistance allows you to visualize supply and demand in zones for a security. Okay, and essentially you want to look at it in such a way that when you're looking at your technical analysis chart, there are certain zones on price action where things can either have an influx of supply or an influx of demand. And when supply is higher than demand, that causes a sell-off. And when demand is higher than supply, then that causes buying, right? That's when prices go up. That's like the basics of economics. I'm sure you know this stuff, right? I'm sure. Okay. Now, as long as you know that thing, it's easy to follow from there. Okay. So it's essentially to be used not as a standalone indicator. Okay. Supply and demand is like one of the most common ones that's used, but you got to use it with other things. For example, volume. For example, relative strength index. There are different indicators that you can use, and my style. I don't rely overly on technicals. I am a fundamental style trader, but you still need to know technical knowledge to succeed in this game. So make sure that you're brushed up. And if you haven't, learned about candlesticks, moving averages, go watch that video first. I have a video out about that, and it will definitely help you out to catch you up on speed for this video. Okay, so we know the basics now. Just know the last thing is that support and resistance levels, they act as a psychological level for markets most of the time, and these usually occur at special levels. I'll get into that later. All right, so just getting into this, here are the key uses and the basics. Okay, so we use supply and demand as a most common form of analysis. It's probably one of the most used ones across all technical analysis. Okay, and as for the support, which occurs when there's an influx of demand, it usually occurs when there is a reversal from a downtrend. Okay, so you can think of it like so the basic idea of when support is occurred is when you have like a wave-like pattern like that, and support occurs when it's a reversal from a bottoming out of a price level. Okay, when you see prices come down, it fails to break this region, it becomes now support. All right, if I can write properly. This whole coronavirus thing's got me all messed up. Look at my beard, guys. It's so long. My goodness. I'm like a caveman at this point. Like, I don't know how many of you guys are like with me. I haven't been to the barber. I feel like I'm just so uncomfortable. But it is what it is, right? All right, back to it. So resistance is the exact opposite, right? It's like when you're going down from an uptrend, right? This would be a resistance zone. Okay, and then you also have resistance when you're going on an uptrend too. It can occur. This would be the resistance. So it depends on if you're going in an uptrend or downtrend. The resistance and support changes, and that's just like a basic idea. I want to get you kind of introduced to the concept first. Okay, and then there are many different types of support and resistance that can form in one given chart, and some of these are, for example, moving averages. These are natural support and resistance zones. Supply and demand zones, where I'll show you where there are price zones rather than price levels. That many people think there are only price levels, but there are price zones where things can reverse. And then psychological levels, There are Fibonacci levels, which I'm sure you have heard about, which not many people know can be used as supply and demand zones. And there are trend lines, right, which are channels and all the other good stuff. So let's get into the first one, which is the definition of the support and resistance. And I just want to show you kind of like a theoretical way to look at it. So the explanation of a theoretical supply or demand zone occurs when the price action tries to test a certain level at least, it has to be at least twice or more. So one time, two times, it has to be at least twice, and it becomes a resistance here, right? If it's at least twice down here, right, then this becomes a support, okay? So it has to be at least twice, and the more number of times it touches that zone, the more stronger of a support or resistance zone it becomes. So in this case, you can see that Apple tested $288 as a supply zone more than 3 times, right? 1 time, 2 times, 3 times, so many times here, and then more times here, more time here. And this became a very strong resistance zone, all right? Eventually, Apple was not able to break that zone, and so it came down, all right? And then it tested an interim support, which was here, before going up to retest the resistance up here. However, it failed to do so and ultimately came down to test this support that was below. Now, after consolidating at the support level, by the way, this is Apple on the 15-minute chart, if you can see it up here. So after consolidating at the support level for a while, it decided to break through after the supply was overcoming demand, which means sellers were overwhelming the buyers, right? So you can see over here that there is a clear supply zone up here and a clear demand zone down here. However, at some point of time, the buyers were overcome by sellers and hence led to a breakdown of Apple's price. Now, after which Apple tried to rally back up, but failed to break this level once again before coming back down. Okay, so that's a basic idea and the definition of support and resistance, how you can observe it in a simple time frame and an example like Apple. Next, we have moving averages, which is another very important part of support and resistance. Many people don't know this, but moving averages can also act as support and resistance. So you can see very clearly here, when the candlesticks are above the moving average, they tend to act as a level of support. And when they're below, they tend to act as a level of resistance. And then when they go back up, they tend to act as a level of support again. So you should always take note that moving averages, in this case I have the EMAs, which are the exponential moving averages, they can act as support and resistance as well. And this typically happens when there is a overextension of a price level, when there is a breakout of a resistance, and the price level goes up far above the moving average that's below it. Well, the price action can come down to test the moving average as a support. And this is the most common way that we use moving averages when there is an overextension. The exact same happens when there is a bearish overextension. That was a bullish one, right? So you gotta keep these things in mind. They happen sometimes, okay? And so just remember that if the candlesticks are above the moving average, they tend to use it as a support. If the candlesticks are below the moving average, they tend to use it as a resistance. Simple enough, right? Cool, cool, cool. So the next one is what I would like to call dual zones. Now, dual zones is not something that is like a term that's coined as a finance term. This is something that I came out with. And I think it's called dual zones because of the name. I think that they are dual zones. And I'll explain why. So, just like how, you know, a security bounces between 2 points of support and resistance, right? There is a point where the security will break through a key level of resistance. For example, here, right? It broke through the resistance, right? And then, after testing a new resistance, it comes down to validate this old resistance as new support. Now, this zone here becomes a dual zone. And it's very common. You should always look for a dual zone when there is a breakout. You can see here for this particular ticker, Beyond Meat broke above the resistance and validated the old resistance as a new support over here. You can see this was a resistance and it became a support before gapping up and opening up the next day. And so this happened twice, and you can see it once over here and then twice over here. So this shows a very strong supply and demand zone that you should be aware of. And if beyond were to ever come back to touch that zone, you could be rest assured that this would be a strong support zone. Or if beyond went up to test this zone, it would be a strong resistance zone. So just keep note of that. The main thing to know here or note here is that the old resistance can become it's right here, so the old resistance can become new support. Okay, and the same thing for support, it can become old resistance on a downtrend. All right, this commonly happens when there is a shift in momentum and trend, and it is the most easiest way to tell when a security uses that zone as either the support becoming a resistance or a resistance becoming a support. All right, cool. Next is the psychological levels. Okay, and the psychological levels are something that are also very common in the stock market. So some price levels are significant support and resistance levels based on the fact that, you know, markets like round numbers. And you have to remember this. Most of the time when people put in limit orders, which are orders filled at a particular price for selling or buying, they put it at a round number. Nobody likes to put a limit order at, for example, 205, right? Nobody will do that. If you want to put a order, you usually put it as $200 or $201, right? Because you want to go round up to the nearest dollar. So because of this reason, these round numbers tend to be support and resistance levels. You can see them right here. Like, for example, 245 here ends up being a support level, strong support. 260 ends up being a strong resistance and a support. This ends up being a support here and a resistance. So you can see how that happens. So when you are approaching round numbers, for example, when SPY approaches 300, that would be a big psychological level. Okay, and also you have to realize that as many market orders are processed in a day, the whole numbers are preferred levels of price action over the decimal numbers. And this is the same that goes for options. Okay, when you see a contract that is maybe $275 versus $275.50, you'll realize the one with the whole number will have more volume and open interest. Okay, just keep that in mind. And the next one that is used as support and resistance are Fibonacci levels. And this is one of my favorite ones, right? Fibonacci levels are essentially used when you can't tell a clear support and resistance after a big drop. Okay, that's right. So for example, I'm going to give you the drop that we just had. I'm going to call this the Corona drop. The Corona drop gave us a total of a 34% drop from the top, right? You can see it right here. We had a 34% drop from the top. Now the problem is, how do you know where the resistance lies from this point down? You don't know. You don't know. It's confusing. How would you know what's above it, right? And you could use previous levels from where SPY was, but you wouldn't be able to tell. So we draw a Fibonacci level from the top swing high to the low swing low to extend all the levels that are naturally occurring. Now, people always ask me, what is a Fibonacci level? And the best way for me to explain this is that Fibonacci is actually a mathematician, and he is the one who realized that there are certain numbers that occur in nature and in man-made objects that are a commonly occurring repeating sequence. And the most common one is the 1.618 number and the 61.8 number, which are commonly repeating in spirals and other kinds of geometrical shapes. So one other place where Fibonacci levels always are obeyed and respected are in the stock market. And you can see them right here. For example, at the 11.8 level here, there was a strong support level for SPY, right? And for the 23.6 level, there was also another support level there. The 50% retracement, which is the 0.5 retracement, gave a very strong level of consolidation, and then the 61.8 level gave a very strong rejection of the Fibonacci sequence. So when you plot these extensions, they can give you possible, not confirmed, possible extension levels where things may use as support or as resistance, and that is the basis of using a Fibonacci extension. Okay, you want to use it when you do not know where the security can land in a quick upward or a quick downward movement. So hence you can plot the overextension to figure out where the support and resistance are after a severe sell-off or a overextension. Okay, so remember that stocks, they tend to use these confinements as like spatial limits. Think of it like they want to be squeezed within these ranges, okay, and obey them. It's like a rule that they have to follow, almost. Okay, you can see this literally 1, 2, 3, 4 levels of spaces that they are occupying, and these are usually just commonly occurring. We don't do anything, they just occur. Now, you know, some people say, like, how is this possible? Well, it could be that traders are plotting the Fibonacci and then acting upon them, which would cause the effect, right? But it's also sometimes just a law of numbers. Who knows? We'll never know. But we use it and we profit from it, so why not, right? Money bags. All right. The next thing are trend lines, and this will be the final one. I'm going to keep this video short because short and sweet the best. I think that this video will be one of the most important ones that I ever made. Straight to the point, like a mamba. Okay, so trend lines are the last one. And trend lines occur when there is a channel for the stock to move sideways in either a uptrend or a downtrend. Okay, and this usually results in a stock making lower lows, or like for example here, this is a high and then you have a lower high, right? Lower high, that's a downward trend. So you can tell that this is starting from our channel, right? And this is a lower low, lower low, lower low, right? So you can tell that this is going like that. Okay, this assists you to tell you where the support and resistance zones would be, but you can only plot it after it touches 3 points. So let's say it touched this one, then it touched this one, then it touched this one, and then it went to here, and then it went to here. Over here, you could start to plot it, and then if you see, it would have adhered this trend. Now, what usually happens or arises from this is that when the stock is making lower highs, this is a bearish movement, right? And so when you start to see lower highs, you know the channel is going downward. If it's starting to make higher highs, then you will see the exact opposite, right? You'll see this. Because this high is higher than this high. Okay? And so you'll see that it's an uptrend. And so when you see both of these happening, you can tell whether it is bullish or bearish movement. And the supply and demand zones are usually sitting at the outskirts of this levels here. So you can tell roughly where it will bounce. Now, as I said, this is not a 100% thing. Don't be taking out your crystal ball and trying to predict the future here. Technical analysis is still, you know, a 60%, 50% confirmation to your thesis. You need to make sure that you're not taking additional risk. This is an example of Netflix that I'm giving you recently only. And then a break in the trend line over here shows you that this channel is now not valid. So Netflix could go up further, which I think it did in the end when I took this picture. And then it could come down further and maybe use this level now as a support. It's possible. Okay, so that is my summary of support and resistance. I hope that it was helpful for you guys. the next video is going to be about chart analysis, wave patterns. I have 2 more videos coming up for you guys, and I hope that you enjoy these videos that I put out. Remember to follow the live stream. If you haven't subscribed yet, please click that subscribe button. Make sure to like this video. It really helps me out a lot. I would really appreciate it if you like the video. Like, if you just don't do anything but you like the video, I would appreciate it if you like the video. Well, I'll leave you guys here. I wish you farewell for your coronavirus. Stay in quarantine, and I will see you next time. Don't forget to tune in for the live streams. We have one every Monday, Wednesday, Friday with OptionsSwing partnered, and we've been having some really good feedback there. So I hope that I'll see you there. Peace.